Welcome to this debate. If oil prices continue to fall, will the Russian economy collapse? A $49 billion deficit, reserves evaporating by 68%, bad bank loans soaring by 85%. Are these numbers a doomsday signal or a false alarm? Without further ado, let's get started.
Thanks everyone for joining us today. The question is clear. If oil prices keep falling, can Russia's economy survive? My position is simple. No, it cannot. And let me show you why with the hard numbers. First, let's talk about Russia's money problem. Oil and gas are the backbone of their economy. These energy exports bring in 30% of all government revenue. But here's the crisis. In 2025, their oil and gas revenues have collapsed by 25% compared to last year. They expected to collect almost 11 trillion rubles, but they're only getting 8.3 trillion. That's a massive shortfall. Now, what happens when your income drops but your spending doesn't? You get a budget deficit crisis. By August 2025, Russia's budget deficit hit $49 billion, and they've already blown past their annual target. This is their worst deficit since the pandemic in 2020. But it gets worse. To cover these deficits, Russia has been burning through their national wealth fund, basically their rainy day savings. Since the invasion started, this fund has shrunk by 68%. They went from $113 billion down to just $36 billion. Some economists are warning this fund could be completely empty by 2026. Once that safety net is gone, what's left? And here's the critical part about oil prices. Russia is trapped. Their budget assumes oil prices at $70 per barrel, but Russian oil is currently selling at $55 to $60 per barrel, with a discount of $10 to $15 below market prices. Every dollar oil drops means billions in lost revenue they simply cannot afford. Meanwhile, they're spending 32% of their entire budget on defense. That's $145 billion just for military spending. They're pouring money into the war while their economic foundation crumbles underneath them. And the crisis is already hitting Russia's banking system. At least 3 of Russia's biggest banks are exploring bailouts within the next year. Why? Bad loans are exploding. Mortgage delinquencies have nearly doubled, and defaults on auto loans surged 85%. When your biggest banks are quietly preparing for bailouts, it's not just a warning sign, it's a financial system on the brink of collapse. So, when we ask, can Russia's economy survive if oil prices keep falling? The answer is clear. They're already struggling at current prices. Another drop would push them over the edge. The reserves are depleting, the deficit is exploding, and they have no safety margin left. The numbers don't lie.
Thanks for having me. Look, my opponent just painted a pretty scary picture with all those numbers. But here's the thing. We've heard this story before. And guess what? Russia's still standing. Let me be clear about my position. Even if oil prices keep falling, Russia's economy can survive. And I'm going to show you exactly why. Now, about those oil revenues, yes, they're down 20% this year. But here's what my opponent doesn't understand about Russia's financial engineering. They have a built-in pressure valve called the ruble. When oil revenues drop, Russian authorities can allow the ruble to weaken, which converts every dollar of oil sales into more rubles for the government budget. It's deliberate policy, not an accident. Oil prices falling? Let the ruble slide and watch budget revenues in rubles stay stable. This isn't a crisis, it's a tool they've used for years to absorb external shocks. Here's something else my opponent didn't mention. Russia survived this similar scenario before. In 2014 to 2016, oil crashed from $100 to below $30 per barrel. The economy contracted 3.7%, but it didn't collapse. Russia stabilized by floating the ruble, using reserves, and adjusting policy. By 2016, they were growing again. They have the playbook. And about that budget deficit, yes, it exists. But Russia has options my opponent ignored. They can raise taxes. They're already planning a 2% VAT increase. They can cut non-defense spending. They can issue domestic bonds, and state banks are buying them. These aren't signs of collapse. These are fiscal tools every government uses. My opponent talked about banks needing bailouts. But look at the actual data from the central bank. 97% of Russian banks are profitable as of May 2025. Yes, some bad loans are rising, but banks have reserves to cover 72% of corporate loans and 87% of retail loans. The system isn't on the brink, it's managing risk. Bottom line, Russia built-in currency cushions, proven resilience from past crises, and multiple fiscal tools. Low oil prices hurt? Nobody's denying that. But hurt doesn't mean collapse. Russia can tighten its belt, adjust, and survive, just like it did in 2014 to 2016. The numbers don't lie, but context matters even more.
Okay, my opponent just told you Russia has a playbook from 2014. Let me tell you why that playbook is completely outdated and, frankly, useless in 2025. Here's the key difference. In 2014, Russia's defense spending was 4% of GDP. Today, it's 7% of GDP. In fact, defense and security now eat up 40% of the entire government budget. Back in 2014, they could tighten their belts and cut spending. But today, they're already at late Soviet levels of military spending. You can't squeeze blood from a stone. And my opponent's 2014 comparison is flawed because today, Russia is fighting a two-front war, one in Ukraine and one against sanctions. Back then, they didn't have $300 billion in central bank assets frozen by the West. They also didn't have a shadow fleet that costs 30 to 80% extra just to ship their oil. This isn't just low prices, it's low prices plus crippling costs and barriers. They're playing on a much harder difficulty setting this time. My opponent says, just let the ruble weaken like it's some magic trick. But here's what they're not telling you. Ruble devaluation means massive inflation for ordinary Russians. When you deliberately crash your currency, imported goods become unaffordable, savings evaporate, and your population suffers. That's not a cushion, that's economic self-destruction. And about those fiscal tools, raising taxes, cutting spending, issuing bonds, sure, Russia can do that. But here's the problem, they're already doing all of it. They've announced VAT increases, they're borrowing domestically, and they've cut everything they can except defense. These aren't tools waiting in reserve, they're already burning through them. Here's what really kills the Russia can survive argument. Their economic model is fundamentally unsustainable. Growth isn't coming from productivity or innovation, it's pure military spending injecting cash. Over 50% of Russian coal companies are losing money. Civilian sectors are collapsing while defense factories work overtime. This model creates the illusion of stability, but it's a hollowed-out economy with a military shell. So yes, Russia survived 2014, but 2025 is a completely different game. Higher military spending, depleted reserves, an already stretched fiscal system, and an economy structurally warped by war. When oil prices drop further, Russia won't have a cushion to land on. They'll hit concrete.
Okay, my opponent's really fired up about 2025 being different from 2014. Let me tell you why they're missing the bigger picture here. First, yes, defense spending is at 7% of GDP today versus 4% back in 2014. But here's what my opponent conveniently forgot to mention. Russia's debt to GDP ratio is still only 15 to 18%. You know what the average is for developed economies? Over 100%. The United States is at 123%. Japan is over 250%. So Russia's saying we can't afford this while sitting on one of the lowest debt ratios in the world? That's not a crisis. That's a country with massive unused credit capacity. They're not maxed out. They're barely getting started. And about those fiscal tools being already burned through, that's just not accurate. Russia announced they're increasing borrowing in 2025 and 2026, meaning they have room to expand. State banks are buying government bonds in a closed financial loop. This isn't desperation, this is how command economies operate. When you control your own banks, your own currency, and your own capital flows, you can sustain deficits far longer than Western economies can. It's not pretty, and yeah, ordinary Russians will feel the squeeze, but survive? Absolutely. Here's the part my opponent really doesn't want to talk about. Russia's economic model isn't designed for your comfort or mine. It's designed for state survival. Over 50% of coal companies losing money? So what? The state subsidizes them. Civilian sector shrinking? Doesn't matter. The military sector absorbs the workforce and keeps GDP growing. This is wartime economics 101. It's not sustainable forever, but not sustainable forever. and collapse in 2025 are two completely different things. Look, I'm not saying Russia's economy is healthy or that this path leads somewhere good. What I'm saying is collapse and discomfort are not the same thing. Russia can endure low oil prices for years because they've restructured their entire system to prioritize state survival over citizen welfare. That's harsh, but it's reality. And reality says Russia's economy can survive falling oil prices, just not the way we'd want to survive.
My opponent is impressed by Russia's low debt. I'm not. It's a completely misleading comparison. Russia pays 12 to 15% interest on its debt. The US and Japan pay around 2 to 5%. It's easy to have low debt when borrowing costs are so high it's almost impossible. Their debt servicing costs are set to double by 2026, eating up nearly 9% of the budget. That's not a strength, it's a debt trap. And yes, authoritarian states can endure economic pain longer than democracies. But endure and survive are different things. Even authoritarian regimes collapse when economic crises become severe enough. Russia isn't just facing low oil prices, they're facing depleted reserves, spiraling deficits, a banking crisis, and industrial collapse all at once. My opponent keeps saying Russia survived 2014, but in 2014 they had room to maneuver. Today, every tool is already in use, every reserve nearly empty. You can't survive the next crisis with yesterday's playbook. So here's the bottom line. Can Russia's economy survive if oil prices keep falling? Not this time. The numbers, the structure, and the timing all point in one direction. They're out of options.
Look, here's what this debate really comes down to. My opponent keeps giving you a checklist of problems, deficits, depleting reserves, high interest rates, and saying this equals collapse. But that's not how authoritarian economies work. Russia isn't designed to be comfortable. It's designed to endure. When you control your banks, your currency, and your entire political system, you can sustain conditions that would break a democracy. Yes, it's painful. Yes, ordinary Russians suffer. But the state survives, and that's the only metric that matters in this system. My opponent says Russia's out of options. Really? They still have the lowest debt to GDP ratio among major economies. They're increasing borrowing capacity right now. They've got committed buyers in China and India who stood up to US pressure to keep buying Russian oil. And they've survived oil price crashes before, not just once, but multiple times throughout their history. The real question isn't whether Russia will be prosperous or healthy. It won't. The question is, can the state survive falling oil prices? And history, data, and Russia's command economy structure all say yes, it can. It'll be ugly, brutal, and unsustainable long term. But collapse? Not yet. Russia's economy can survive low oil prices because authoritarian systems trade comfort for control, and they're very good at it. Thank you.
All right, over to you, the judges. What do you all think? I'm looking forward to seeing your votes and thoughts in the comments section. We love hearing what you have to say, and I believe every perspective brings something valuable to the table. Also, I've done my best to fact-check the information you've just heard, and you can find the relevant links in the description box below. Before you go, don't forget to hit that like button and subscribe. Your support means the world to us. We'll see you next time. Bye-bye.